Welcome back, friends. We are coming towards the end of the first module, in which we have dealt with almost all the practical cases along with adjustments. So let us discuss the last case in this module, and apart from that, an activity will be shared in your classroom. Please just go through the activity, in which we will be working out some of the cases which we have discussed in the class. Try to work out the answers by yourself. So let us continue with the practical case. Next case. Mr. X keeps his books under single entry system and sells goods at a gross profit of 25% on sales. A record of cash transactions appears unreliable. From the following particulars, prepare his final accounts for the year 2020. Stock on 31st December 2020 was 1,63,000. Opening and closing debtors are nil because all the sales have been made in cash. Make a provision for depreciation on plant at 10%. So let us go through the details. Here details of sales with regard to gross profit is given. So treatment with regard to the preparation of memorandum trading account, that equations has to be dealt here. And apart from that, closing stock is given, and here debtors account, you need not have to prepare debtors account, and you need to provide for depreciation. So let us go through the books that are prepared by Mr. X. Statement of affairs as on 1st January 2020, otherwise known as opening balance or opening balance sheet. Likewise, we need this to identify the opening capital. Here it is said that here excess of assets over liabilities, that means opening capital. It's another term used for specifying capital. Next one, cash summary is there, just like the cash transaction. Usually cash transactions during the year were given in the form of a paragraph. Here a cash summary is directly given in the question, and go through the details given, whether there are anything that is peculiar. Sale of plant is there, purchase of plant is there. See, and one thing, when regard to sale of plant and a date, usually whenever the date is specified in any of the item, remember, one way or the other there will be definitely an adjustment related to that particular item. Remember that. Here there is a depreciation on plant, and here there is a sale of plant and purchase of plant. It's a adjustment that has to be dealt cautiously. So it's a pattern of the cash book. Okay, let's go to the next one. Purchases ledger. Oh, thank God, you need not have to prepare creditors account. Already purchase ledger is given. It's under the name of creditors account. So let us go through the details. So actually in this case you need not have to prepare any ledger accounts. Usually the ledger accounts you have been preparing are debtors account, but in the question it is mentioned that no need to prepare because there are no credit sales. If there is exists credit sales only, you need to prepare debtors account. So no debtors account. And next one you used to prepare was creditors account. Here already creditors account is given. Purchase ledger is another term given to the creditors account. And next you used to prepare is statement of affairs. It is also given in the question. So, and the cash book, it is also given. So actually in this question you need not have to prepare any ledger accounts, but still there are works that has to be done before going directly into the trading profit and loss account, because there are some adjustment that has to be taken very cautiously. So let us deal with the adjustments first before going into final accounts. So this is a copy of our question. So in the question, first item means adjustment relating are sales, and it is mentioned that gross profit is 25% on sales. So let us find out the amount of sales. So in order to calculate sales, we know that the equation is sales equal to cost of goods sold plus gross profit. Actually the equation is plus or minus gross profit or gross loss. Let us assume that in this case it will be profit. Otherwise, if it is a loss, you need to deduct it. There is no big deal. I should remember that. So in order to find sales, you need cost of goods sold. Cost of goods sold is not given in the question. You need to identify it, and there is an equation for identifying cost of goods sold. So we will come to that. And next one, gross profit. Gross profit is also given in the question in the form of percentage. That is, gross profit is 25% on sales. Very good. Sales is not there. How we are going to find gross profit? So we will deal how to solve this one. First one, you need cost of goods sold. So let us begin with the equation of cost of goods sold. Cost of goods sold is opening stock plus purchases minus returns minus closing stocks. Returns means purchases returns, and usually there was one another item, direct expenses or wages, like that. In this case there are no information regarding direct expenses and wages, so let us assume returns. Make sure whether there are any returns given in the question. Okay, next one. So let us find out each item. First one, opening stock. For finding opening stock, go to the statement of affairs, stock 20,000, it's there. And regarding purchases, here while taking purchases, remember here purchase ledger is there and cash summary is also there. Here you can get the details of credit purchases, here you can get the details of cash purchases. Remember to go through it. Here there are no information regarding cash purchase, so don't worry. Now just go through this one. There are one item is there, purchases 5 lakhs. So, and returns is also there, so you need to adjust that. And finally, closing stock. Closing stock is also given in the question. So let us substitute all these details. Opening stock 20,000, purchases 5 lakhs minus returns. Remember, always adjust returns. Always adjust returns with purchases as well. If there is purchase returns, adjust with purchase. If there is sales return, adjust with sales return. Remember to do that. Here there is a return to creditors 15,000, so adjust it. Minus closing stock is given in the question 1,63,000, so you will get 3,42,000 as the cost of goods during the year. So next one, you need to find gross profit. So in the question it is mentioned that gross profit is 25% on sales. Since there is no information regarding sales, we can use the other step, that 1/3 of sales, cost of goods sold. You can use that method, because we have learned about a trick regarding finding the amount of gross profit if it is related to sales as well as cost of goods sold. Whenever gross profit is relating to sales, that is 25% of sales, that means the gross profit will be 1/3 of cost of goods sold. So let us go with the second part. 1/3 of cost of goods sold is 3,42,000. So 1/3 into 3,42,000, you will get 1,14,000. So you got gross profit, and previously you got cost of goods sold. Now we can substitute these two amounts in this equation. So sales equal to 3,42,000 plus 1,14,000, you will get 4,56,000. So we have dealt the first adjustment that is mentioned in the question. So we got sales. Now next go to the other information. Opening and closing debtors are nil. So don't worry, there are no other further adjustment that we have to do. Next one, provision for depreciation on plant. Until previous cases, whenever we were dealing with the depreciation on any fixed assets, you used to multiply the percentage along with the value of the asset and find out the depreciation. It will be shown as an expense in the profit and loss account, and while preparing balance sheet, you will deduct that depreciation from the concerned asset. That are the steps which we have been dealing until previous case. But in this question, you have to be very cautious, because the depreciation has to be provided on plant. But at the same time, during the year, there was a sale of plant as well as purchase of plant. And apart from these two items, there was another plant which were there in the business and from the beginning. So there are three items, three details with regard to plant and machinery. See, at the beginning there was 75,000, and during the year about 25,000 of sale on certain plant was happened, and by April there was an additional purchase was made. So there are some details with regard to plant. So here the thing is, you need to find the depreciation of all the plants. All the plants means here depreciation can't be provided to all the plants for the full year, because one is there from the beginning and it was a part of it was sold during the year. So you have to find the depreciation for that part of the asset that were there in the business for the whole year. So you have to provide full depreciation for the asset that were there in the business for whole year, and you have to provide a part of the depreciation for the asset that is sold out, because it was sold on September. So until September you have to provide depreciation, but don't provide depreciation after September. And regarding purchase, it was purchased on 1st April, so you need to provide only depreciation from 1st April itself. So there are three types of depreciation computation that has to be made with that particular fixed asset, and all these has to be done very cautiously. And apart from that, you need to do another adjustment, that is with regard to sale of plant. Remember, whenever there is a sale of fixed asset, definitely there will be profit or loss on sale. There will not be any par sale. Par sale means the value of the asset and the sale value remains the same. No, it will never work like that. Either there will be profit or either there will be loss. So you need to identify that one also. So actually in this question they have given statement of affairs, cash book and purchases ledger, and no need to prepare debtors account in order to give an adjustment that will turn our heads upside down. So we need to study how we are going to deal such a situation. So let us begin the computations with regard to the depreciation as well as profit or loss on sale of plant. So first of all, we begin with calculation of profit or loss on sale of plant. So how we are going to find that? Remember the steps which we are going to deal now. First one, the copy of the question is here. The cost of the plant was 30,000. That is mentioned here. See, sale of the plant on 1 September 2020 at rupees 30,000, 25,000. That means 30,000 value of asset was sold for 25,000. So the initial glance we can see that 30,000 is the value, 25,000 is the sale amount, so 5,000 loss. Never do like that, because profit or loss on a particular asset is computed by comparing sale amount, that is here this one 25,000, and not the cost. We have to compare this amount with the book value of that particular asset. So what is meant by book value? Book value means the value that appears in the books. So what is the peculiarity of the books? Books are accounting books where we used to work out various accounting details or accounting rules, accounting transaction, like that. So this one is the sale value. It has to be compared with the book value. So book value is where the value of the asset shown as per the book. So in the books we used to adjust many items. One such item is depreciation on fixed asset. So you need to find the value of the asset on that particular sale date after adjusting the depreciation of that particular asset. And with that value only you have to compare the sale amount, not on the base of the cost value. This is the cost value, not on the base of cost value. Remember, sale of an asset is always compared with the sale price and the book value of the particular asset. So here the cost of the plant is given. So how we are going to find the book value? It's very easy. If you deduct depreciation from this amount, you will get the book value. That is the concept. So with regard to providing depreciation, that is the important step that has to be considered in this question. You have to provide depreciation for 9 months. So what is 9 months? See, here it is September. The sale was carried out on September. So the year begins from January. So 1st January to 1st September, there are 9 months. So from 1st September, January to 1st September, this particular asset, that is 30,000 value of the asset, was there in the business. So you have to provide depreciation until the sale date. Sale date means 9 months, on the 9th month of the particular year. So how we are going to provide, or how we are going to find the value of depreciation? That's very easy. So before we go that, these are the status of the asset. From the beginning itself, we have 75,000, and on April we bought 1 lakh rupees of asset, and on September we sold 30,000 worth of asset. We will come to that. Okay, we were discussing this one, how we are going to find the 9 months depreciation of 30,000. In the question it is said that depreciation on plant is 10%. So for 30,000 rupees worth of plant that has been used in the business for 9 months has to be provided with depreciation for the 9 months, and the computation is 30,000 into 9 by 12. 9 by 12 means the time computation rate into 10%. Previously we were just multiplying 30,000 into 10%. That means depreciation for the whole year. But in this case there is an adjustment. That asset was used only for 9 months. So you have to provide depreciation only for the 9 months. So the amount is 2250. This amount has to be deducted from 30,000 worth of the asset. Then you will get 27,750. So this is the book value of this particular asset. So for this value, the asset should have been sold out. Instead, what was the sale price of this particular asset? It was sold for 25,000. So the value is 27,750, but it was sold for 25,000. So is it a profit transaction or a loss transaction? Definitely it is a loss transaction. So loss during the year is 2,750. I hope you are getting the concept. This is very important. This is how you have to deal with the sale of a particular asset with regard to the any purchases or a sales during the year, and in between a year likewise. These are the conditions. This is the most toughest adjustment that can come across with regard to depreciation. So I hope you understand the concept. So we found the loss with regard to the particular asset and also the depreciation of the particular asset also. So right now we have completed all the adjustment with regard to that, but apart from that, let us find out the depreciation of the remaining part of the assets. Remaining part means remaining assets, remaining plant, because we need the depreciation of the entire plant, because in the question it was said that make a provision for depreciation on plant. So you have to provide depreciation for the whole plant. Now that is the next trickiest part. Remember, in the beginning there was 75,000 rupees, and on September, out of 75,000, 30,000 was sold out. Don't worry about this addition. We will come to that part after discussing this one, because it doesn't affect the sale or computation of the actual value of asset that were held in the business during the period. We will come to that. So in the beginning there was 75,000, and out of 75,000, 30,000 was sold. Okay, for 30,000 we found the depreciation. So I am asking, what is the value of the remaining asset in the business right now? So it will be 1 lakh, but apart from 1 lakh there is one thing. Out of 75, 30 is sold. So what is the remaining? That is 45,000. So for 45,000 you have to provide depreciation for the full year, because out of 75,000 we sold only 30,000. So remaining value of the asset is 45,000. It was there during the entire financial period. So you have to provide depreciation for the full year. So how you are going to provide full year? 45,000 into 10 by 100, that is 4,500. Next one, addition on, there was further purchase on asset on April, that is 1 lakh. That is also mentioned in the case. See, purchase on plant. So how you are going to provide depreciation for 1 lakh? Do we have to provide the depreciation for the whole year? No, because it was bought on April. So we need to provide depreciation from the month of April to the end of the financial year. So there are 9 months. So 1 lakh into 9 by 12 into 10 by 100. Its depreciation is 7,500. See, this is how you have to deal with the multiple transaction with regard to any fixed asset, comprising of sale as well as providing depreciation for the additions during the year. So what is the total amount of depreciation charged during the year? It's very easy. If we add these three amounts, you will get the total depreciation for the year, that is 14,250. So these are the adjustments with regard to the details, additional information given in the question, and on the base of the details stated in the various accounts. Now we can go for the preparation of trading profit and loss account. Next one, that is for the copy of the question which we have discussed. These are the additional computation which we have done on the basis of information given in the question. On the basis of these details, let us prepare the final accounts of Mr. X. So we will begin with trading profit and loss account for the year ended 31st/12/2020. We all know we will begin with the opening stock 20,000 and closing stock is also there. So let us write down those amounts. Opening stock 20,000. After that, closing stock 1,63,000, that is already given in the question. And next one, purchases. Remember, in the question purchases was 5 lakhs, and in the same ledger account there was certain amount of return, so adjust the returns. Remember to adjust the returns of the concerned items. So show the net amount. Next one, sales. It was also mentioned in the question. There was no credit sales, and we have found the amount of sales during the year, that is 4,56,000. And next one, by taking the total of both sides, this side is having a bigger value, show the same amount in this side also. Take the difference between this total amount and these two amounts, you will get the gross profit during the year, that is 1,14,000. See, it is already given in the question. This is the trading account pattern of the computations. I hope you know the concept, because these amounts is already computed in the working note. So you can either follow this account or you can follow this working notes. It's all up to your discretion. So let us begin with the preparation of profit and loss account. Gross profit, carry down to the next one. First one, loss on sale of plant. See, it's a loss. Losses has to be adjusted in the debit side of the profit and loss account. If there was profit on sale, it has to be shown in the debit side. In this question there was a loss, so that has to be shown here. And after that we computed depreciation, and next you have to go for the various items. Salaries 1,26,000. Next one, general expenses 37,500. After that, depreciation on plant 14,250, and go through all the detail whether there are any more which has to be considered. Unexplained receipts 23,000. There are no information regarding what that is, because it doesn't mention about the nature of the receipt. Anyway, since it is a receipt, we can show. You can show in the credit side, but it is better to show the amount in the next statement, that is balance sheet, because here it is mentioned unexplained receipt. So the receipt can be in any form. It may be in the form of incomes or in the form of current assets likewise. So since there are no information regarding the nature of the receipts, it's better to show that receipts in the balance sheet rather than in the profit and loss account. If the nature of the receipt was mentioned in the question, that is, if it is an income item, it can be definitely shown in the credit side. Since the nature of the receipt is not mentioned, it is better to show the same in the balance sheet. You can show this amount in the credit side by assuming that it is a form of an income, but it is better to show the same amount in the balance sheet. So let us take the totals of both sides. You can see that the total here is having a bigger value, so write the total amount in both sides, and see there is a deficit in the balance. So find out the difference between 1,80,500 and 1,14,000. So you will get net loss during the period, that is 66,500. So now let us go to the preparation of the statement, that is balance sheet as on 31st December 2020. For that, let us begin with the details given in the question. First one, capital. Here the opening capital is 3,82,000. Remember to adjust the corresponding items with regard to that. In the question, there was an additional capital of 1,50,000, so you have to add 1,50,000. See, you have to go through each and every item to identify the items that are related to particular one. See, until previous case there was no additional capital. But you have to consider that the additional capital during the year. We have learned about the format to identify the actual capital during the year. In that format, we have mentioned about the additional capital. But unfortunately, until last sessions, we haven't met with any case that includes an additional capital situation. So add additional capital 1,50,000, less drawings during the year 52,000, and finally loss during the year 66,500. Show the net amount. Next one you have to show is stock. Stock means closing stock. It is already mentioned in the question. Next one, plant and machinery. Plant and machinery, beginning it is 75,000, but during the period we have made necessary adjustments, and apart from that there was a purchase of particular asset. So you need to show that. So beginning 75,000. And during the year there was a purchase of certain plant on April, that is 1 lakh, so you need to add. Next one, there was a sale on asset. So remember the sale of the asset whose value, book value, was to 27,750. So you need to deduct that, because in the balance sheet you need to show the present value of the asset. So present value means you need to add all the additions or purchases during the year, and you need to deduct all the sales during the year. Remember the value of the asset, that is book value of the asset, has to be shown here. So 1 lakh has to be added. From that you need to deduct the sale value. Sale value means book value, not the sale value, book value, and less depreciation during the year, that is 14,250, and show the net value of the asset in the respective column. Next one, buildings 1,75,000. There are no adjustment with regard to that. Next one, furniture 14,500. Next one, loan 49,000. That is mentioned the cash summary. See, loan amount is there. And finally, one more item, that is unexplained receipts. We have mentioned about the nature of the item. You can either show it in here or show it in the balance sheet. It is better to show it in the balance sheet since the nature of the item is not specified in the question. So unexplained receipt, usually it is considered as a suspense account. Show the amount. Now take the total of both sides. You will get a tally amount 4,85,500. I hope you have understand the concept. So just go through the case which we have discussed, familiarize the adjustments which we have gone through. If you have any queries, please let me know, and in the next session you will be given an activity case where you have to try and work out some of the questions with regard to the practical cases which we have discussed, find the answers of that, and we will continue the next module once we have dealt all these cases and your activities submitted on time. And remember, don't forget to complete your activity shared in the classroom. If you have any queries, please let me know. Thank you.